Hey, good morning. Welcome to the daily housing crash update. How much mortgage fraud is currently in the mortgage market? And what areas of the mortgage market are we seeing the most fraud occur? That's what we're going to talk about this morning. It's a great Ohio mid-morning here. It's still warm. It's still relatively warm out. I could sit comfortably outside and not really need a jacket, and a lot of fog today. So that's kind of an eerie setting when you see all the fog when you wake up in the morning. I think it's kind of neat. Anyway, all right. So mortgage fraud. Let's dive into where we're seeing all the stress when it comes to the risk of mortgage fraud. And you'd be shocked to hear, or maybe you wouldn't be, that it's not in just normal purchases. It's actually the highest when it comes to investors. And according to CoreLogic and their latest mortgage fraud update, the link's in the description below, we're seeing the most in FHA and investor purchases. So that's what we're going to dive into. Real quick, my name is Jason Ferrier. If you're new to this channel, welcome. I do these updates, try to do them every weekday morning, depending on how busy I am with clients and investing stuff and all that other jazz. But yeah, my name is Jason. I'm a realtor. I'm an investor just outside of Columbus, Ohio. And yeah, like, subscribe to my channel, share this video, and whatever you do, please comment below. Thank you for watching. All right. So overall in the United States, according to CoreLogic's latest report, 1 in 123 mortgage applications, when you look at all the mortgage applications for residential purchases, 1 in 123 apps have some type of fraud indicator. That could be identity fraud. That could be like a straw buyer who's like a fake buyer, hiding the identity of the real buyer. A variety of different schemes and tactics, right? That's up 8.3% year over year. So year over year, you look at this 2024, look at 2023, and compare the stats. We have 8.3% more mortgage fraud occurring in the U.S. housing market. What I thought was really interesting, though, and this is why I picked this topic for today's video, investor purchases. The fraud with investor purchases is up 11% year over year. 11%. And also, this is something else to note, FHA purchases are up 7.5% in fraud. So the two areas that are growing the fastest, according to CoreLogic, would be FHA purchases and investor purchases. In fact, 2 to 4 unit purchases, buildings that are a duplex, a triplex, or a quad. Remember, those, a lot of people think those are multifamily. I guess I consider them small multifamily, but really they're considered residential when you talk about the mortgage market and loans and really how we analyze data. When you get over 4 units, that's when you're really at commercial mortgages and commercial buildings. 2 to 4 unit buildings are up 5% year over year in fraud. And that's 1 in 27 applications had some type of fraud indicator. 1 in 27. I thought that was pretty high. I think it's like 3.5% if my math is right off the top of my head, 3 point something percent. So you've got 0.81% or 1 in 123 apps when you look at across the board with mortgages. But if you look at just 2 to 4 unit purchases, which usually those are investors, but we're going to get to that at the end of this video. So stay tuned for that, because I've got something else to tell you about 2 to 4 unit purchases that you've got to be aware of. Very, very critical. Those 2 to 4 unit purchases up 5%, again, 1 in 27, 3.5 or so percent. So a lot higher when it comes to 2 to 4 unit buys and compared to, single family houses and mom and pop just buying a house, right? Maybe a first time buyer or whatever. So the question is, why are 2 to 4 unit buildings and purchases seeing the most fraud? Why is that? What's going on with that? Well, This is what I think. Now, they don't tell you this in the CoreLogic report, but based on what I know about the housing market and from investing, and by the way, this is my niche when it comes to investing. I primarily own 2 to 4 unit buildings. I don't know if that's the best strategy in the world, but I like it and I'm good at it. And I've kind of developed I don't know, an aptitude, if you want to call it, for buying 2 to 4 unit buildings and holding them, and fixing them up and then renting them out. You should know that when you're buying, usually when you go out to a bank to get a loan for a property and it is a non-owner occupied 2 to 4 unit building, you're going to get either a commercial loan, even though it's a residential property. A lot of times you get a commercial loan or a conventional loan, and those have those have down payment requirements anywhere from 20, sometimes 35%. Rarely do I see anything, at least not anymore, where you can put less than 20% down. Most of the time it's 20 to 25%. And I'd say actually most of the time it's 25%. So you have to have at least 25% down to even get the loan in a lot of cases, if you're an investor like me and you're going to buy a building across town that's a 2 to 4 unit building. The other problem with those loans, or the other kind of constraint there, is that interest rates tend to be higher and they usually have adjustable rate terms. Sometimes they have fixed rate terms for 30 years, but a lot of times they have adjustable rates. And the ones that are fixed for 30 years, oftentimes those have prepayment penalties, meaning if you sell the building or refi in the first 2, 3, 4, 5 years, depending on the program, you're going to pay anywhere, you could pay 1% to 5% penalty when you sell or refi. That's a big deal, right? So if you have a building, use rough math, you have a building for $100,000 and you sell it and you have a prepayment penalty of 1%, you're going to owe the bank that you currently have the loan with $1,000. It's not fun, right? Not fun at all. So lending on 2 to 4 unit buildings traditionally is, it's not hard, but it's not favorable compared to owner occupied single family houses. So that's where the fraud, I think, comes in, because FHA, if you are fortunate enough to be able to live in a 2 to 4 unit building, owner occupy it. So I live in one unit. Let's say I have a duplex. I live in one side. I rent out the second side of the building, or the top or the bottom, however your building's configured. If you live in that building, you can usually, a lot of times, qualify for an FHA 2 to 4 unit loan. And that has a lot of value with it. So an FHA 2 to 4 unit loan, it used to be that you had to put 15 to 20% down for an FHA 2 to 4 unit building. But FHA changed that last year, or it may have been this year they changed it to 5%. So now you only have to put down 5% if you're using an FHA loan on a 2 to 4 unit building. That's a big advantage. I mean, think about it. If I'm going out to buy a quad, a 4 unit or whatever, and I have to put down 25%, and because I don't live in the building, and I got to use a regular loan, versus an FHA loan where I only have to put down 5%. That's pretty favorable, right? So I think that's what you're seeing. I think you're seeing with the fraud, I think you're seeing maybe investors lie because they ask you, how are you going to use this building? Like, how are you going to use this purchase, right? And if you're applying for an FHA loan, you've got to sign some documents saying, hey, I'm going to live in this building. I'm going to owner occupy it. I'm not living in that. It's not an investment like that I don't live in. You have to live in one of the units in order to qualify for that FHA loan. And so I think the fraud's happening when people go, well, I'm living in one unit, but they really don't, right? Maybe they leave it vacant and have a mailing address of the building, but in reality, they live across town or in another city or in another state, or maybe even in another country. So that's where I think the fraud is happening when it comes to investors and 2 to 4 unit buildings. Not only that, but FHA has loan programs that help you repair the building. So as an investor, if I buy a 4-unit building and I don't live in it, I can't qualify for that FHA loan, and I use a normal loan, it's hard to get money to at a good interest rate to fix up the building. So it's kind of like, you got to be really creative to make that happen if you don't own or occupy. But if you own or occupy and it's an FHA loan you're qualifying for, they have 203K programs, they're called. The FHA has special programs to lend you the money at a favorable rate and a favorable down payment to actually fix up the building. Again, owner-occupied buildings have better loan terms usually than non-owner-occupied, generally speaking. So I think that's where you're seeing the fraud again. I do. So what does this all mean for you, right? Like, you're not a fraudster, I hope. You're not, you can't control the fraud. By the way, if you're on the sidelines waiting for the greed, corruption, and fraud to leave the housing market, you're never going to be in the housing market. I suspect there's always been greed, corruption, and fraud. In fact, I looked back at the history of the CoreLogic fraud report, and we actually have less fraud now per application overall than we did back in 2011. And you can look at the graph yourself. It's in their report. So I don't think fraud, greed, and corruption are ever going to leave the housing market. There's always going to be speculation. There's always going to be someone trying to make money. So you're not going to, you can't wait for that to leave. You have to act now. And so this is where you can really take advantage of these FHA programs legally take advantage of them. If you're someone looking for a first house, if you're someone looking for a second house, and you can be flexible in your life, I would strongly encourage you to go out and look at 2 to 4 unit properties, to live in a unit and then rent out the other units in the building. The cost benefit of doing that, or I guess the inconvenience that you're going to face by, living in an apartment and renting out the other apartments in your building, that inconvenience, or that, I don't want to do that. I don't want to be a landlord. That seems too hard. I just want to buy a house. That whole attitude is going to cost you. It's going to, because the opportunity to live in one unit, rent out the others is massive, massive. And you should really look hard at that if you do truly want to enter the housing market and you're somebody sitting on the sidelines thinking that it's unfair, it's full of greed, it's full of corruption, it's full of fraud, and there's no way I can enter the market because of those darn investors. I'm an investor, but I can tell you that's probably the biggest mistake, or the biggest do-over I wish I had in my life when it comes to real estate, is beyond starting earlier with investing, is that I would have at an early age moved into an apartment. I bought a duplex. I would move into one side, rent out the other, because you can get those FHA loans. And by the way, if you do it right and you do the repairs right, you can slowly fix up the other units and have your mortgage paid for with cash flow to boot. I know somebody here in Central Ohio. I'm not going to name his name. I'm just going to call him the Exterminator. So the Exterminator is someone that I know locally. He's he actually started his extermination business. I think I was one of his first clients, and I don't even remember how I found him, but we connected. He did some work for me on some of my buildings, some clean out, some exterminating. And he told me, hey, I want to get into real estate investing. How can I do it? What can I do? And I said, well, here's some ideas. And I think at that point, he started looking at buying some multifamily, some 2 to 4 unit buildings, and house hacking them by living in one, renting out the others. Well, I lost touch with him, or I hadn't talked to him in a while. Then I reconnected with him a few months ago. Come to find out, he's on to his 4th building. He's done this 4 times now. So now he owns 12 units total, and he's got several buildings. And I don't know if he has any kids or not, but I'm pretty sure he's married. And he's living in a unit with his wife, fixing up the other ones, and then renting them out. The loan programs available for that, folks, I can't stress it enough, far outweigh what you can get as a, for a single family house. Or I'm sorry, as an investor on multifamily. It's the loan programs are amazing. and to live in a unit and have your mortgage paid for, and then on top of that have cash flow, then you can either stay in the building, don't have to sell it, or you can keep the building, right? Keep the building, refi it to a more traditional multifamily loan, or even keep the FHA loan and go out and get another one. Go out and get another building. There's just many different avenues for that. So if you're someone that's trying to break into the housing market and you're scratching your head going, none of this is fair, you got to do things that other people won't do. No matter how many times I tell clients, especially younger clients, hey, you should think about this. You should think about, doing a house hack, buy a duplex. I show them a couple of duplexes. Nah, it's too much work. Nah, I want a yard with, a basement and a man cave and a garage and marble or granite counters and stainless steel appliances. Come on, man. Come on. You can do better than that. So I just want you to think 5 years ahead. Think 5 years ahead and go, if I have this building, this quad, this is going to be worth like $350,000 when this is done. I mean, and I'm having my mortgage paid for me. And I'm giving people, by the way, I guess the moral victory there, or the intangible victory, is that you're going to provide affordable housing or housing for other people through this process. There's a lot of 2 to 4 unit buildings, at least, especially you got to listen to, especially in Ohio or the Midwest. I'm sure it exists in other areas, but like there's a ton of old, decrepit, dilapidated multifamily buildings. A lot of big houses that were built in like early 1900s that somebody split up, and instead of having 3 big bedrooms on the bottom and 2 big bedrooms on the or 3 big bedrooms on the bottom, 2 big bedrooms on the top, they turned it into a duplex at one point. So it's kind of like half duplex, half not, but it just needs some TLC. It needs some renovation. Then it becomes a great value. Those exist all over the place, and you don't have to compete with like institutional investors. You don't have to compete with other home buyers. Nobody's really looking at that except investors, except local investors. But because you can qualify for the FHA loan, that's a big advantage for you. So anyway, I encourage you to check out those programs, 2 to 4 unit buildings, greed, corruption, and fraud. Regardless of those things, get off the sidelines and get in on the field, get on the playing field. Stop, stop just armchair quarterbacking everything and saying, when this happens, I will do this. Hell with that. Do it now. Go out and find an opportunity now. That's my daily housing crash update today. So go out and find a deal. My name's Jason Ferrier. I'm a housing nerd. Have a great day. I will see you tomorrow.